Hello, welcome to the European Open briefing for Wednesday, November the 15th. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So we have quite a bit of a risk off in the markets this morning. This is weighing on the dollar as well as stocks globally. The dollar index has slid to a 3-week low. We also have a bit of uncertainty surrounding the passage of the tax plans in the US. The main winner this morning and yesterday, of course, was the euro, which has soared above the $1.18 level following that impressive GDP numbers out of Germany and as well as other European economies as well. The Australian dollar, though, has hit a fresh 4-month low. We had disappointing wage growth data this morning, and commodities are also having a bad day as well, particularly oil, which is down 2% following the IEA's reduced forecasts for demand. Let's start though with the dollar first. We can see dollar yen is down sharply. Since midday yesterday. It has dropped below the 113 level to a 4-week low of 112.80. The dollar index is a 3-week low of 93.63. US indices also closed low yesterday, and that sell-off on Wall Street carried on through Asian markets and in Europe as well. At least at the start of European trading, all European major indices were down. Also impacting the dollar is the fact that yesterday the US Senate unexpectedly said that they want to include a repeal of a key part of Obamacare in the tax bill. So that's the repeal of the individual mandate, which requires all Americans to have health insurance, otherwise they would have to pay a penalty. This could make it more difficult to pass the tax bill in the Senate, given strong opposition by Republican senators to reforming or repealing Obamacare. We're going to have quite a few more Fed speakers this week. Yesterday we had Fed Chair Janet Yellen participating in a panel discussion. We had Chicago Fed President Charles Evans, who is a voting member in the FOMC. He was rather dovish, saying that he's not happy that he's not convinced that the low inflation patch at the moment is temporary or not. That suggests that even if he was to vote for a rate hike in December, he would potentially vote against a rate hike next year. We also had Atlanta Fed President, who was only recently appointed, Raphael Bostic. He's not a voting member at the moment, but said he would be supportive of a December rate hike. Moving on to the yen, we can see that the yen is broadly up this morning. It's even up against the euro, despite the euro rising against most major currencies. The pound is also struggling against the yen this morning. Both are down around 0.3%. We are seeing a bit of a sell-off in global equities. The worst hit was Japan's Nikkei, which fell by 1.6% to a 1.5-week low at its close today. We had Japanese GDP numbers. We didn't see much of a reaction in currency markets. Japan's economy expanded for the 7th straight quarter. That was the longest run of growth since 1999-2001. GDP expanded by an annualized rate of 1.4% in the third quarter, slightly better than forecasts of 1.3%. Although maybe slightly worrying is that private consumption fell slightly more than expected during the quarter. But overall, the main reason for the yen's gains this morning is that risk-off sentiment that we have in the markets this morning. Moving on to the euro, we can see that euro has just surged upwards. We can see it's broken above the key 1.18 level. It's at a 3-week high. It's also up sharply against the pound, hitting a 4-week high of 0.8980. We had German GDP numbers coming in above expectations. The German economy grew by 0.8% versus forecasts of 0.6% in the third quarter. We also had Italian GDP beating forecasts, as well as a number of Central and Eastern European countries reporting their GDP figures, all of which which are showing strong growth. So all of that has once again reinforced the expectations that the region is economic recovery in the region is gaining momentum. It's becoming more broad-based, and this means that potentially the ECB will not be extending its QE once the next program expires at the end of September 2018. Let's move on to the UK pound now, because although we did have softer than expected inflation numbers out of the UK yesterday, we didn't see a big fall in sterling. In fact, soon after, the pound reversed higher against the dollar, coming close to 1.32 this morning. UK inflation was unchanged at 3% in October, confounding the Bank of England's own expectations that it would rise to 3.2% and analysts' consensus forecast of 3.1%. Core inflation was unchanged at 2.7%, and producer prices also rose by less than expected, suggesting that the inflation may have peaked. And this also dampens expectations that the Bank of England will be raising rates over the coming months. We can see the pound only fell briefly soon after the data before rising strongly against the dollar, though it is down against both the yen and the euro. So next in focus after the inflation numbers is unemployment data later today, as well as retail sales figures tomorrow. Also perhaps adding some support to the pound is the fact that it's so far been a good start to the EU withdrawal bill, which has reached its committee stage in Parliament. 5 amendments have been discussed so far, all of which have been voted down, boosting the May's leadership, though this process will likely take several weeks. So far it has been a good start, but Theresa May could face some opposition to other amendments over the coming weeks. Let's look at the Australian dollar now, because we did have wage growth data out of Australia. We saw wages rising by 0.5% during the third quarter, missing forecasts of 0.7%. The year-on-year rate was slightly up, though, from 1.9% to 2%. We also had the Westpac Consumer Confidence Index, which, although remains in negative territory, it was up from November. It follows yesterday's record high in the NAB Business Conditions Index, so it's a bit of a mixed outlook for Australia. Growth seems to be holding up well, and business confidence, consumer confidence doing well as well, but inflation and wage pressures are subdued, and today's wage data pretty much reinforces the growing outlook that the RBA will likely stay on hold for all of 2018. This is weighing on the Aussie, despite the greenback's weakness this morning. It hit a fresh 4-month low of 0.7573 against the US dollar. And finally, looking at oil prices, although they had managed to hold fairly close to their 2-year highs, they fell sharply yesterday. We had the International Energy Agency in its monthly report saying that oil demand for 2017 and 2018 will be lower by 100,000 barrels per day for each year. This contrasts with the OPEC's own outlook for demand in its report on Monday. This has weighed on US crude oil prices. We can see that it briefly spiked below $55 a barrel. We also had the API inventory numbers yesterday, which showed a rise in US crude stocks. The official government data is due later today, so that could also potentially impact oil prices later in the day. And finally, looking at today's economic calendar, we can see the Japanese GDP numbers there and the Australian wage data as well. UK unemployment out shortly, and US inflation and retail sales will be the main focus in the North American session. That's it from me. Thank you very much for watching, and have a great day.